Welcome back to the channel, guys and gals. We're going to talk about Johnson & Johnson. Yes, the company that keeps giving you the most beautiful baby wipes in the world. This is the stock for you. Johnson & Johnson. Get yourself a manicure. Get yourself ready. This is the time for us to get rocking and rolling. Johnson & Johnson is this the stock that's going to save you when you need it in a recession. Let's get to it right here, right now. We're going to do a stock analysis on Johnson & Johnson. We're going to look at all the metrics from revenue, net profit, earnings per share, shares outstanding, return on invested capital, total assets versus total liabilities, everything else in between to give you the understanding you need to maybe do some more research to understand the stock more before you invest. This is what this channel is about, and if you like this channel, remember to like and subscribe so you can continue to get great videos like this. And if you stay right to the end, my friends, I will give you the possible intrinsic value of Johnson & Johnson. And where maybe a possible starting point is, if you're an investor like me, the channel for you is about value investing, growth investing. This is what this channel is about, and I work between those ranges to give you an opportunity to look at stocks that are maybe undervalued, or if they're overvalued, what price you can look to get into them to get a margin of safety. And that's what we do on this channel. So let's get to it. Johnson & Johnson stock analysis and intrinsic value right here, right now. Yes, one of the great Johnson & Johnson. 5% down for the year. What's happening with the stock? Why has it gone down when I found the metric that has really pretty much put that one down? Because its revenue is similar, 94 billion, 2022, and 93.7, 2021. So not much growth at all between the 2 years. Net profit going down, 17.9 billion in 2022 from 20.8 billion. Was just a bit of a flash in the pan. 2021, everyone was buying everything, hand sanitizer and the likes. Maybe it was just a flash in the pan because they had a bit of steady net profit, so maybe their net profit will start to go towards that figure again. Earnings per share, $10, so that's very good. Short interest, no short interest at all, not 0.9%, so not even 1%, so very good for you Johnson & Johnson shareholders. If you're out there or thinking about buying it, you don't really have to worry about this company going into cancellation, out the door, bankruptcy. That's what the word I was trying to find. But obviously, to me, Johnson & Johnson, there is a little bit of a thing, we'll come to it, but there seems to be a lot of stocks that have big long-term debt issues, but we'll get to it. The 52-week range for the stock is between oh, sorry, I actually totally missed that one. We will skip that one. PE ratio 15 to market cap of 37.375 billion. This is the stock that really needs to buy the stock. Do you have to have all that money in the bank to buy it? Very, very comfortable stock to look at there. To me, the dividends here, the dividends are 4.76, $4.76 with a 3% dividend yield, pretty nice. Return on invested capital, which I was surprised, at 14.8%, very, very nice. Assets versus liabilities, really liking this company. 191 billion total assets versus 115 billion total liabilities, so that is nearly a double up. I like to see 3x if we can get there, but that is very, very good. Free cash flow 14.3 billion, down from 22 billion, with long-term debt of 45 billion, but they can pay that off in 2 or 3 years, so that's not a too major concern. But if you want some sort of concern, that is the concern with this company, is the long-term debt. And the shares outstanding at 2.4 billion. There's been a bit of a purchase buyback, I believe, or was it just the price has gone down? I'm not 100% sure on that one. But before that, it was pretty even. But you're finally getting a bit of money back for your buck. So that's something good for Johnson & Johnson. So what can this company do to continue to grow? Well, it's all about profits. It's about cutting costs and pushing their profit up. Whether they've already done all that and they can't really get any more, then they're going to have to find a way to get more revenue and get more down to the bottom line, which they do pretty good anyway for this sort of company. So it's not a major. They're pretty good compared to some of the other bigger tech companies out there. So they're doing good in most metrics here. But yes, for bear case that this company gets into more and more debt, and let's see you later. The competitors come and take over the space and take it away from them, which looks very highly unlikely. That's why there's no short interest in this company. So they expect this company to continue to grow and grow and grow, but probably just slow growth going into the future. So this is where we come. This is what you're here for. Intrinsic value of Johnson & Johnson. I use the Graham's calculator. You can find this on TradeBrains. Absolutely no affiliation at all. This is just to give you an option of where to start to look at intrinsic value. You can get more complex ones than this. This is just a simple one, which we look at share price, earnings per share, growth rate to give you an intrinsic value. And then I'll take off any dividends and anything else I see and give my own intrinsic value and where I like to buy the stock. So let's get to it. So we're going to look at the stock at about $150 per share, at earnings per share of 10.3, growth rate of 5%. The stock should be $192 according to this calculation. We bump it up to 7% growth, you're looking at $234. Now if we get to 10% growth and then just put earnings per share up a bit to 12, then you're looking at a $350 stock. And then we go up to earnings per share of 4 with 10% growth, and you're looking at over $400. So what does this mean? The stock's absolutely, it could 2x from here if everything goes sweetly, possibility. But it's a slow growth company. I don't see any major fly to the moons with the stock. But if a recession happens and the stock continues to go down and down and down, then you can look at a multi-bagger. So how do I see the stock? Well, it's pretty hard to really go where I see big potential here, but I'm going to say right now at current value, I'm looking at about $180 stock. For me, that's my intrinsic value. I'm taking off a little bit for the dividend, but I see this company is sweet. But where do I want to buy it at? It's not a bad price right now, don't get me wrong, but if it gets under 100, then I'd start to think about loading the boat, get a sweet dividend and all that. But if it doesn't get anywhere near that, I will just let this one stick off into the sail into the 7 seas and forget about it, because it's not the stock for me. I like to find stocks on sale. I might not have started off that way in investing, but this is where you learn over time. And now it's all about buying stocks at good rates. Get that margin of safety for when you buy it, so if it goes wrong, then you're alright. If you missed a big multi-bagger, don't get worried about it. You just move on to the next one. You don't want to buy in when it's all at the hype. Just look at GameStop, AMC, even Tesla. Some of these stocks just flowing up to the moon and then they drop, crash down, you lose it all. Not saying you lose it all, but I mean, you lose a lot of your percentage and it can be a long time before you catch up and get back there. So you're better off to be down, low, sweet. Do all your research. If you see all your research and see the stock flying up and you still think it's going to continue to go up, go invest. It's not an issue. We're all different. We all do different things to invest. I mean, I take risky plays as well, so it's not, I'm not all just value. I've got growth investments, all right. And we're seeing with Meta, you got both of them. You got the growth and the value last year. So if you got into that one, Palantir, if you got into that, you got a bonus there. And there's still potential upside with these stocks. Some stocks you're thinking a bit more about it. Is there upside? Like Apple is an instant one that comes to mind. A stock I own. It hasn't really done much for me in the last few years. Is this company gonna get back to it? Maybe they need to do a share buyback again, might be on the cards for this company. They need to do something to give back to the shareholders, because at the moment there's not much really showing that they're growing. But anyway, that's another stock. This was one for you for Johnson & Johnson. I hope you got a lot out of this and just a little bit of intrinsic value. It's not financial advice. I'm just a random guy on YouTube just giving you some education and entertainment purposes only videos. Do your own research before you invest into any stock and do it at your own risk. But thank you so much for joining me, and I'll be back with another video. I do 3 days a week, videos just for you. Remember to like and subscribe, and have an awesome day out there.